So first of all, before we start, there's one thing I want you to take note of. If you cannot hear me, tell me. Say you can't hear me. If you can hear me, say you can hear me. If you cannot hear, please write it there. If I'm not responding, how would I know? Can you hear me? Fine, you can hear. That's good. Let's proceed. Alright. Now before we start this class, there's one thing I would love to tell everyone here. Whether you are a newbie, whether you are whatever you are, alright, you just need a lot more attention. There's what we call paying attention to details. Most people here, that's why when somebody was suggesting that we have a class of over 2 hours, I was just wondering within myself that how did you learn? When you pay attention to details, you pick every point. Alright, you pick every point, which means that even the things I said subconsciously, you are aware of it, you heard it, you are practicing it. There are so many things that I have said from the beginning of this class till the end that even me on my own cannot even remember, but they just came out subconsciously and they are part of the lesson, and they are things that are still going to help you. Alright, so one thing you should note is that you are not in this class for a mistake, and another thing you should notice is that this strategy that we trade, this system, has a very high win rate. If you follow everything I taught you, you're supposed to go in a month nothing less than, in a good market condition, let's say trending market, nothing less than 2 to 3 losses if you take a maximum of 15 trade. So if you are taking so many losses, you have to check yourself, because what you are trading is what we are trading. Now there are so many factors that could make you unprofitable even when your strategy is better. Number one, you don't know when to leave a trade. As you see, 1 to 2 weeks to reward, 1 to 3 weeks to reward is so perfect, and it could make you consistently profitable over time. If when you analyze, you observe that at 1 to 3 the market always reverses on you, safe to say that at 1 to 3 that should be your exit. There are some things that they will not teach you. As I am here, like I told you guys before, that I did not learn key levels from my mentor. A lot of things I did not learn from him. I did not learn disruption from him. What you are trading right now is my process, is my experience, is my knowledge, it's my own understanding. Alright, so if you as a person cannot do the same, it means that you cannot trade. The main thing that is the killer, of, see the background noise, why? The main thing that is the killer of success is positioning blames. For example, you have where you are putting your blame. That is the reason why I'm not profitable. If this thing had been like this, I would have been like this. If this thing would have been like this. The moment you center something as the reason why you are not in the position that you are supposed to be, you will lose every opportunity to grip out of it, because you keep making that excuse that this is the reason why I am here. If I trade right now and it doesn't go my way, I will not say that the strategy has stopped working. I will not blame this or blame that, so that I am doing what I am supposed to do. If it goes my way, it will go. If it doesn't, it doesn't. As simple as that. Most of you don't even follow what I am explaining. This is somehow going to be the last class in the course outline, and the next one that should come is just like 1 or 2 end of month section before the mentorship is over. Now let me tell you one thing. Once the mentorship is over, it is you against the market. Yes, you are still under the Sabi Girl brand, but it's just like saying that you have graduated and you are expected at that point to show results, not excuses. This class so far is doing good, fine, but you people can do better. The reason why I put this class very far till this 20th is not that I could not teach this last thing the day we ended the other classes. It was because I want to observe everyone to see your loopholes. Stacking or confirmation is the least of, it should be the least of your problem. Why? Because if you get your direction, if you get your structure, the market, before you even start, the market itself needs to go to your own direction. Confirmation method is just saying that we saw this, it's an added confluence. It is not what is making that particular trade going in your direction. For example, if you are in a bearish market and you're supposed to sell and you see a confirmation for buy, the buy will not hold. Why? Because the direction of that market is not bullish. So in as much as confirmation this, confirmation that, it lies in the structure. Everybody was shouting, stacking this, stacking that, this one and that one. I was very quiet to observe, because I knew that the major problem can never be stacking. Even without us doing the stacking, a lot of people have been stacking. How are they doing it? Because of their directional bias. They are getting their structure. Directional bias is structure. They are getting the direction of the market. So you ask yourself, how are these people doing it? It's simple. The market is going in their favor because their structure is correct. I won't want to say too much. Let's just go into the chart. But I would love to see great improvement henceforth. I'm not like the other. See, there are people that when you finish classes with them, especially people that do monthly mentorship, I'm not condemning them. It's none of my business. But I'm just telling you the truth. Once you are done with that 1 month mentorship, your section with them is over. At that point, it is you against the market. But then you have this privilege to be in a community that will help you grow. Everybody is trying to push forward. People are there to answer your questions daily. Your other members also, the little way they can, ready to assist. So there is no excuse for unprofitability in TLS 2.0. There is no excuse. There is no excuse. As a matter of fact, if anyone should come tomorrow and say that this strategy is not working, or I did not teach everything I say I will teach, I will not even respond. The reason is because, to the best of my knowledge, everything I ought to teach this class, I have taught them. If there is anything I observe later on, if I should tell you, the time I taught you key level, I had no full idea about inverse key level. This is the honest truth. That's why I told you learning never ends, because even me, I am still learning. If inverse key level was in the picture when I taught you the main key level, I wouldn't have removed it, because inverse key level is not a topic on its own. It's a subtopic under key levels. So why did I not teach it then? It's because I do not have the full knowledge on it. It is something I observed that happened over time, and then I went to backtest it on my own, and I got the picture behind it, and that was why I taught it. So if by tomorrow, if the mentorship is still ongoing and I learned something new, I will never keep it to myself. I will not tell you to come and pay for TLS 3.0, TLS 2.5 or anything because I learned new thing when your mentorship is still on. No, I will not do that. So I will never hold anything, because if I want to hold, I will not hold this class. If I wanted to hold this information, this class won't be here, because as a matter of fact, the things I'm teaching you, if I trade them, I'm already making a lot of money. So your mentorship fee is just a side income. Is not the major money that I could like pull out from the market. If I decide to go on a back-to-back trade in a month, I should make the money that was probably gotten from this class. But that's not my goal. I am happy to see that people from this class are doing well. How many people have bought houses? People are building. Another thing I would like to say is stop feeling intimidated by people's results. The last will I say chaos that happened in the group was some people feeling bad that others are posting results. There's one thing you should know. If somebody posts their result, it is coming from the heart of motivation to you. They are not posting it to show up. Even if they are posting it to show off, is it easy to build a house? No. And it is worth rejoicing. For one thing, these people did not have this house before. The other this was this girl shouting that this other person was not a newbie. Somebody told you that she is a newbie when she came to the class. Because she's doing very well, having results, you just concluded that she can never be a newbie. Why? The early the better that people like focus on the main reason why you registered for, because the time is ticking. There is no time. The year is coming to an end. Everything that I taught you, the system is working. The system is working. I am recording. The system is working. Is working. Like it is working. I can't even. If I go a week back on this gold, you will see that you're not even supposed to take more than 1 or 2 losses. Not a week back, a month back. The system is solid. I can drop. The reason why I stopped dropping trades in the channel for some time, because I got a bit busy. And then most of you, why do you feel bad when other people want to benefit? This is, I mean, Anyway, I don't want to say too much. It's fine. But one thing I should tell you, that the system is working. It is working with capital letter W. It is working. This system is really efficient. The early you sit up, the better for you, because more results will still come. Anyway, let's look at gold. We'll be doing I'll be writing out steps you can use for your top down analysis. Firstly, let's treat the top down analysis before we do the confirmation, then the stacking. The truth is that even if I teach the stacking today and your analysis is still wrong, to be honest, you will still take losses. Stacking is not going to help you if your background analysis is wrong. Now, this is the process, and this particular top down analysis is done based on if you want to trade a new pair. For example, if you are familiar with, that's why I say you can decide to trade one or two pairs. It's no big deal, right? Because it saves you time. The time you will carry to do top down analysis, if it's your pair like gold and VIX 25, you already know what is going on. Now, top down analysis is not the reason why a trade will go in your direction. Top down analysis is not the reason why a trade will go in your direction. Now ask me why. The market moves from internals to external, not external to internal, which means that everything that is happening in this chart, as far you are an intraday trader, everything works internally. You can't tell me that you want to buy gold and you are using the daily time frame. Where will your SL be? The main reason for this top down analysis, which once as gold is now, I can't even remember the last time I went through these procedures. I'll be explaining to you why. Because I already know the internal structure. The major thing you should focus on is your internal order flow. From 4 hours, 1 hour, 2 hours, 30 minutes. Now, the first thing, if you want to do your top down analysis, is to get your range. The first thing is to get your range. Now, this is subjective to you are analyzing a new pair and then you don't know how would I put it, you don't know the direction of that pair, so you want to know the direction from the higher time frame down to the lower time frame. Now, the first thing you have to do is to get a range. Now, why are you getting your range? Now, you are getting the range to know the last place where price changed character and the next place where price is coming from. You're using that range to know what's happening in that higher time frame, like where the price change character from, where is price coming from, the order flow in the higher time frame, is it bullish or bearish? That is the main reason for this range, which means that, for example, if this is the 4 hours time frame, we use this to know if this is the range low, 3 valid external. We use this to know that yes, externally, which means that you have to go to the 4 hours time frame to go and look for where price change character initially. Externally, that's what you have to do. Then you start drawing, then from there you mark out till the last most recent external. Which brings us to number 2. The next thing you have to do is to identify your most recent external, because it is the most recent external that gives you what we call the intraday trading range. This one here is the normal range to know where the direction was from and how it is. Then this one now, mark your external, is to show your intraday trading range, where that place is your main focus. That's why I say it's not even all this thing. Where is that? For example, which is your strong high and weak low. This is a weak high, strong low. So put it like from here to here. This is our intraday range. Then the next thing you have to do is, which is not very necessary, is to identify your internal liquidities. I'm sorry, your transactional liquidity. Why I say it's not very necessary is because transactional liquidity will come out when this low has been taken out, which is like the external change of character. Then you start talking about all of this. Then we have, let's go to the next one, which is you start identifying your internal liquidity. Internal liquidity, which is now you are going to the lower time frame. Remember, you have gotten your intraday range in the 4 hours here, and you now go to like the 1 hour to get your internals, your internal liquidity, which is getting to the most recent internal. You mark out your most recent internal. Following the order flow, this is the most recent internal. And if you're trading with the continuation model, and you probably have your entry here, maybe with key level, you are expected to keep buying from there. And if price continue buying, taps on that key level and it buys, and later takes it out, giving you inverse key level, your target is what? The inducement just before it. and you are out. Why are you leaving this trade just before? That's why I say exit matters so much. Exit matters so much. When price creates a key level, if you are trading counter, you just assure that the main reason why that sell of that counter is holding is because price wants to go and clear out liquidity. So once price either it tap on the liquidity or it takes it out and it's coming back, it will take you out. Exit matters a lot. The main thing price comes for each day we trade is just liquidity, which is money. So at all points, be careful of the liquidity, especially inducements that have support in them. For example, this is a support here. Be careful. Be careful doesn't mean you have to go and buy here. No. Be careful if you are taking a counter from a sell. Now you mark out your internal liquidities, which is your inducement, and the second your disruption. Then the rest is now internal liquidities that price will strip out if these two fails. And this is your overall what? Intraday range low, which is what? Your external low, where you expect a change of character to occur from. Now the approach is follow the order flow using your intraday range. External, follow the order flow. Then continue with price with your continuation model. Now it is better to see this. If this is inducement and this is disruption, and you want to buy from disruption, it is better for price to tap on this disruption. Whether you want to take it out or it doesn't take it out is not your business. It's better for price to tap on this disruption, and if peradventure price already created a sell key level here, the best approach, that's why I see that I have the best entry so far. The best approach of this is not entry directly at this in disruption. It is allowing this sell key level here, price to fail, and then you are buying from here. You can see that you are not trading on this disruption here is called uncertainty. Buying at this place is uncertainty, buying at this point is confirmation. This is an aggressive entry. So this here is better than this. Now let's continue. You follow the order flow of the intraday range using your continuation model till the most recent continuation model gets invalidated. And if you do not, in your own book, you don't trade counters, fine, don't bother taking an inverse when the most recent key level fail. Just wait at either the inducement or the disruption. How? If price gets to the inducement, it either continues buying or it comes to disruption and it starts buying. How can you tag along this buy if price starts with this inducement? It is very simple. Just like this, a sell key level 2 has to fail. Something like that has happened on gold. When was that? Let me try to. This 4 hours. Let me show you. Okay. Now you can see it over here. this is an inducement here. If somebody went there to buy at this inducement, you will get taken out. But if you are waited for this, this inducement also have a key level, which is the invalidation is this guy here, these two candles. I told you key level invalidation is the two candles. The validation is these two guy. Now if these two guys the invalidation and price somehow go to this level and invalidated, remember this is the candle that invalidated because he went above it, and after that entry I was talking about, that entry on confirmation and not aggressively is simple. After the sale key level failed, what the price create now, somebody that was entering directly from here has been taken out. But if your own entry now is this buy key level, after this sale here has failed, this buy key level, you are very much saved. You can see the buy. What is profit? You can see the buy from here down to this point. You know how many pips is this? 1 2 3 4 5. 1 to 5 weeks to a word. And one thing about key level is that you don't have to set your SL very far. No, key level, just put your SL just right below the two invalidation candles. If the the two key levels are too big, then take 50% of the key level. You either miss some or have more weeks to reward in some. That's what is called when you use 50%. So you either miss this or you have more weeks to reward. With this now, your weeks to reward here is over 1 to 10. Let me calculate it. 1 2 3 4 5 6 7 8 9 10, because you have divided the POI into 2. So what am I saying? Entering like this is better than entering like this. I'm seeing the top down analysis. I'm trying to like bring you to the light. That's why I say pay attention to details. Today somebody screenshotted my status and was asking me that as soon as he saw my status that I posted 50% inverse key level I used for my sell entry, that he just remembered that I thought that some time ago. Because you do not pay attention to details. Are you supposed to forget that? This is the POI. Let's put it on 1 hour. Now I will tell you why I sold. Whatever price is doing all over here was good. Everybody took the buy. Everybody was happy. The buys were going smoothly. Everybody was okay. I was busy. I did not trade at all. But like I told you, the disruption of this guy is this high. The inducement is this guy. So far so good. Only the inducement has been taken out and reclaimed, which is this sell that is ongoing here. So to get a major move, we either break here or we break here. But if we break here, price will start clearing these internal liquidities till the external. This is the reason for the sell. When everybody was buying and buying and buying, the counter buy you all did. I think the buy started from when this sell key level failed here. they missed entry here. Some people got another entry, I think is it here, abi this, they entered here. Some got another entry. Just everybody, I saw the trade, everybody was happy. Another one, the one that almost everybody took, is this particular one. Fine. Now where did my sell come about? If you look very well, price created a very valid resistance that turned into a support at this level. At this level here. This is to invalidation. But invalidated it immediately, which means that there are some people that wanted to buy here that was taken out. So in order to recover your money very fast, if price had not broken this low, let me teach you QML plus inverse. If price had not created, like, broken this low, and let's say that it was this candle price top with this big candle that invalidated this POI, your entry would have just been this high that price broke through. Why? Because this is the only place that had that momentum that price broke out from. So you are not using, because price has not created any other one. Now the reason why I used this one was because following the most recent, the moment this guy was now broken with the body of the candle, these two candles became the most recent. And because this POI is even if you use 0.01 lot size, this SL will show you shiggy. The SL was big. I had to tell some persons that asked me, I said just use 50%. Even 50% was even still big. Some persons even use 75. Invalidation is just here. And so far from here, he had over 1 to 3. And this POI is still very much active. Now, one thing you should note with counter trade and inverse is that price on an 80% win rate always respect that first inverse than the ones that continue later. How do I mean? It's easier for price to respect this here than price to respect these other ones when it creates it, until it takes out a major one again like this and give a new break of structure. This little structural liquidity, price can respect this first one, invalidate all of this, still maintaining this first one, but we'll still respect when price gets to this point. Hope you are following. Let me check the Telegram group whether you are following. I should increase my RO to what now? This is the biggest now. This is what we have been using from the class. I struggle to see the two candles that's supposed to be the invalidation. How do you mean? It is two candles that make a key level. So how do you struggle to see two candles when that is what is making that thing a key level? That's not even possible. Let's continue. So now this becomes the POI. Now let me use one stone to kill two birds. If I want to stack here, the best way you can stack is number one, if you have low capital, always go for 50 to 75% of your point of interest. You cannot have $10 and you are entering from this zone. How? You cannot have $20 and entering from this zone. How? It won't work. But if you have $20, the only thing is that you will miss some, but those ones you will catch will pay for the ones you miss. That is just the truth. I have multiple derived accounts I trade. On some accounts, I enter directly at the point of interest. I stack all of them. On some accounts, I enter at 50%. On some accounts, I enter at 75%. I only post the one I want you to see. It's my account. I decide what goes there. But strategically, you can only make money stacking with little funds when you enter, when price gives you little invalidation. If you have $10 for this trade, now let me tell you how you can enter this trade. Number one, a $10 account that want to enter this big POI should not even target 50%. Your own entry should be around here, which is what? If we divide this thing into 4, 1, 2, let me try to make it equal. 1, we have 1. Let me use gang, but gang will only give me 3. That's why I wanted to. Gang box can only give me 3. Let me draw it as I'm drawing it already. Okay, I've gotten the 4 POI inside just 1 POI. Now, if you want to enter this with your $10, do you know that at 75% you got a snipe entry? I am telling you how this thing works. Even on VIX 25, go back to all the trades I drop on Telegram. Monitor every price I entered with. Check it. If it's a small account, check the entry price. You will see that most of these entries are at 75% of the zone. Now, I repeat, I have multiple accounts. Some can be at 50%. It depends on the balance and what I want to stack it to. If I have $100 balance and I want to stack it to $1,000, you cannot see me entering from here. If I have $500, I can risk from here. And how I will enter with that $500 is that I will still set limits at this point. I will still divide it into like 4 or 5 zones just inside here. Limit 1 will be here. Each limit increases by 1 lot size. How do I mean? If initial lot size here is 5 lot size at main entry, for example, next lot size will be like 6. The next one will be like 7. Why? Next one will be like 8. Next one will be like 9. Why? Because the 9 of this place to this SL is equal to the risk of the 5 from here to this place, which means that if I'm to lose from here to this point, if I'm to lose like $50 from here to this point, if I use $9, I will still lose. If I use 9 lot size from here to this point, I will still lose $50. But from this place down to this place, I will make like 50, 100, 150, 200, 250. But what am I risking? Just what? $50. And don't forget, other positions are still open. Strategically, that's what you are going to do. Now, I like to be precise when I talk about stacking because most people do not understand the depth of it. At some point, when you when you focus more on your market direction, you figure out that this stacking will just go in your place. Like, you don't have to bother, it just goes in your own place. I repeat again, if you have a small balance, always target 50 to 75% of the zone. And if you have a not so big balance but not so small, set limits, divide your zone into like 5 or 6. Set your first. Why are you setting your first limit? Is because you can miss the trade. If you miss it, this one will cover up. I've done it before. Which trade was that? On VIX 25. I dropped it on the channel, and then it just like tap on it and started going. You can see that I had no other positions inside here. Like, it did not trigger anything here. Why? Because price just tapped and it left. So those drawdowns are opportunities to open positions more wisely. If your first lot size, I'm repeating again, if your first lot size here is 5 and your risk from 5 to your invalidation is $50, and you have $150 account, you have set your first $5 lot size account there. So we have $50 risk first, and the next one, instead of 5, you are putting 6, and instead of $50 risk, it gives you like $45 risk. We have plus $45. The next one, the more it goes inside, even if you increase the lot size, the risk reduces. The next one, we go with like 7 lot size. We get like $40 risk. So we have $50, $45, $40 risk. The next one, we'll go with like 8. We get like $35 risk. The next one, we go with like 9, which is the most invalidation, like the last part of it. And it gives us like $30. And let's say the account is like $200. You figure out that inside this your $200 account, you have managed to open. This is a limit entry. Don't forget, you can set limit till like 75% of it. Now inside this, now you figure out that inside your $200 account, remember, when you fund money and you call it stacking, just know that that is your SL you are funding. There is nothing like I want to use this money later. Once you fund money and it's first, in short, every money you deposit, there is no later there. If you see profit, that is good, but the end goal is profit. But that's just the truth. Now if you count all of this that we did, the total here is like $200. Now don't forget that the lot size we used here is 9 lot size. This is 9 lot size, risking $30 from this point, which means that we are having, at each move here is giving us $30 profit. 30, 60. Once price comes to back to your entry, you are up 120 from just one times 1, 2, 3, 4. $200 has reached $1,000 right now, just by coming back to your entry. So it is brain work. You don't have to stress. This thing I just explained here now. If somebody had tried this thing on gold, for example, with this calculation, if it's like your $200 account, you should be at least at 1K once price comes back to entry. And the most better part about this is that even if it retraces back, you will not be taking out. You people will be asking, is that when you enter, price don't reverse back, it doesn't take you out, the little drawdown will take you out. Enter wisely, know when to enter. You don't just randomly open positions. When we get to the bullish army, I'll teach you the second type you can use to enter. Don't just like, no. Divide your balance into batches. At each point, increase the lot size. Later on, if this price can do just one, let me tell you the secret now. Let me show you something. If you look from here to this point, it is 1-to-1 risk to reward. But in reality, you have made $2,000 from this trade. If from here down to this point you give $1,000, which means that from here down to this point you be giving like $2,000 something from $200. People will start to doubt you. Is it possible to take $200 to $2,000 something in one trade? This one, that one. So when you are stacking, always target 10x, because your 10x is a full move. Except in a good time where the market favors you and then it just goes one time, like sometimes go dumps and then you are just lucky, gets 1-to-1, and instead of it to like reject, it just goes down. At that point you can even do the 200 to 5,000 whatever. But to be realistic, it's just 1 to you can think it's 1-to-1 weeks to reward, but this thing you see here is 1 to 10 weeks to reward. This thing you are seeing here is 1 to 10 weeks to reward. But for the layman, when you put entry zone year to year, what they are seeing is 1-to-1. But you that know what you are doing, this thing is 1 to 10, because each position is giving you ×2. That's number 1. Number 2, the bullish and bearish harami. Like I said before, these confirmations do not work when, but before I get there, if you don't want to stack, just feel free. If your capital is small, 50% of the POI is okay for you. Like I said, you win some, you miss some, but the one you win cover up all the miss you have missed before. That's just the truth. So imagine you did this from here, and that position trigger when price came here, and that one trigger when price. There's no how price will blow your account before you get to this point, because before you enter, before you set those limits, you have calculated what each position will give you. You have calculated what each position will give you at invalidation and at TP. So this one here, at this point, should be giving you like 120 times other ones. If this one is giving you 120, this one is giving you 110, this one is giving you 100, this one is giving you 90, this one is giving you 80, you are up almost 1,000. And then if your target is 1-to-1 by the chart, it is 1-to-10 by stacking. That is on that. This class is very long. 10-11. Lastly, let's do the bullish harami. Remember I said what brought about this whole stacking thing is from this inverse. So not like just see random POI now and go and say Sabige said, I beg in the name of God. This period they are just looking for a way to say rubbish about me on Twitter, and God so kind, me I don't even have strength for drama. Even the things that concerns me, I've not even talked about it. Now the ones that are not my business, I'm just all about making money. That's the truth. I came to this space to make a lot of money. I came to trade. I came for liberation. I came to seek knowledge. That should also be your goal. Once you find those dragging stuff interesting, I tell you, you are far behind, because when those people realize life, it's far gone. I can't lie to you. Because if it was only me doing this stacking and not other people, I won't even like, I would try to defend myself. But looking at it, what point am I proving? Was it not yesterday one of my private mentee, he did $100 to about $8,000. So it all ends with, they don't know this thing I just explained now. It is what you know versus what you do not know. Who would have told them that you can strategically set limits like this and a 1-to-1 trade can give you 1 to 10? They wouldn't know. Because what? They would go with a very big lot size at the beginning. Sometimes too, not all the positions will trigger. Sometimes just 3 will trigger. That is why sometimes you can do 200 to 1,500, 200 to 1,000. It's still a win. But for big POIs like this, price 75% of time always goes back to the 50%, because it tries to cover up those momentum candles. Like this movement that I put here now, price trying to fill the imbalance. That's why it's coming back to fill at least 50% of it. And that's also like taking out liquidity. So now let us assume that you said you will not trade this at this point of interest until you see confirmation, and let us say you used 50% of the POI and you need confirmation. Let's go to the 5 minutes. Let me take out this. If you used now, one thing you should know about before we get to this bullish army, there's one thing I want you to take note of. Because it says confirmation candle does not mean that you should set your invalidation blindly. As a matter of fact, the invalidation for every zone is the invalidation for every zone is the 2 key level. So whether you get a confirmation here, you get it here, the invalidation still remains that it is this. The only advantage you may likely get is that the trade will go in your direction because you have seen that particular reversal candlestick inside your zone. But the invalidation still remains this. Plus, if you see another reversal candlestick, you can open another position. How do I mean? Let's go to the 5 minutes. Let us assume that we took out this zone and we have no intention of using 50% or whatever, and we just want to open positions at each bearish harami we see. The first tap on this zone was I think this was it. Please give me a minute. Okay, the first tap on this was this year, and price gave us a bearish harami. Now this is the first sign that this trade should go in our direction. That doesn't mean that at this bearish harami you start opening plenty position, because even at this bearish harami, mind you, this is the overall invalidation, but you can open a position here. The best confirmation to use is these limit entries. How do I mean? Even inside this bearish harami, you can still use this limit entry, like combining the two together. You have seen this bearish harami here, you can leverage your 2 position with SL at this point. If it moves, don't because it start moving and then you start opening more. No, because the goal of stacking is that you don't get taken out before price move in your direction. But you could remember, this is just a confirmation candlestick that price will go in your supposed direction. Now you can see that price later also gave another bearish harami at this point, which was the last one before it reversed and started selling, and it gave us these good buys. So if you are setting limit at this point and you see this bearish harami again, you can as well open another limit, still maintaining this SL, because some pairs usually weak out. Before, what people normally do is that when they see the bearish harami, the invalidation is the two harami candles, and some pairs like VIX75 1S will just kick you out and go your way. So after like I backtested it, I just figured out that yes, you have to just stick to the main higher time frame key level invalidation. The bearish harami is a reversal candlestick confirmation. And let me just put it in a very funny way. That word harami was gotten from Japanese, and is a they call it I think that harami means pregnant in Japanese. So the pattern visually represents pregnancy. If you look at this thing here now, this bearish harami looks like a pregnant woman. Wait, let me take this out. This thing looks like a pregnant woman. This is the woman, this is her stomach. It's like this. It's her stomach. So visually it presents like a pregnant woman. So it's all about how you enter this. You could get like one or two derived accounts, and now you can name one strictly 50%. You know that even at 50%, you can still divide your zones into 4 or 5. Yes, even at 50%. That's why I say that when you do this stacking for some time, you have even more understanding. That even myself, everything I'm like, this stacking is my own personal understand. Nobody taught me. Nobody say mentor. Nobody. Even the person that taught me most of this like trading thing that I call my mentor, he doesn't even do all this stacking stuff. Nobody taught me. I figured out this thing I'm explaining to you by myself. Even inside of 50%, you can still have levels too, and still increase lot size as it goes. It's the same thing. And before you count it, from year to year can give you like $200 to 2,000. Simple as that. The class has taken too long, so we are going to stop here. I'll be posting this video by tomorrow, and the question for mentor will be open for 2 hours tomorrow in case you have any question at all, so you can ask them. So thank you for attending today's class, and see you in the next class.